It's been a couple of days since I last did a video, and I just wanted to have a look at sort of the week ahead. Even though we are on Wednesday, I wanted to look at this week, some sort of developing potential investments and trades going for this week, next week, and potentially again going through August. I did do a video at the start of the month as well. Some of the companies that I was looking at have done quite well. I know that Codal was one that I was watching, and that did surge a little bit, and then it's come back down again. That was up around 20%. But today I just wanted to look at carbon emissions, cotton, the New York Times, Dexcom, orange juice, Nucor, and the Dow Jones. Just a general just have a look at the general markets and how they're doing. It's the 18th of August. My name's Tyrone, and you're watching Minipip. Jumping straight into the video, I just wanted to look at carbon emissions first. I originally did do a post on this, and when I did the post, we was trading at around 55.12, as I can see by the video, and currently we're down. Well, we're up to 56.84. So we have seen a nice rise of around 200 points in the last 2 weeks, and it's just spiked a lot just recently. But when this was actually posted, was around sort of this area here, this 55 level here, and we've seen this bounce. We did actually at one point was up 300 points. Looking at the actual outlook from it now, we're really struggling at this level up here, and once we do break that level, there is, we'll definitely go higher, but we could definitely see a sort of pullback there and more consolidation, through to September, and then potentially just a rise to 65. Because this is government intervention, you can have government intervention with this one, and it's very politically influenced. Chances are if we get to these 60s, 70s level, the EU is probably going to step in and change something. So that's something to consider with carbon emissions. I wanted to look at some other commodities as well, and one of them was cotton. I've noticed cotton recently has taken off, and today we're down a little bit, not much, but we was up quite a bit at one point today. I think it was up 1%. But given that it comes back to this trend line here around 91, 94, that could provide a potential good buying opportunity, because we have seen this general upward trend for some time now, and in fact we could go even further, from this pandemic low when we was just at 50, and we've seen this really nice rally, and we've continued higher. So overall, this is looking pretty good. This is a trading market. It's not something that you invest in. You're buying this to trade it, but that's what you'd be looking for, sort of an entry somewhere in the region of around 91, with your stop somewhere in the region or below these moving averages, maybe around 86 would be a good place to put the stop, with a target of a 100. Now you can buy this on a futures contract. If you don't know what a futures contract is, it means basically you buy it and it expires at a certain time in the year. This one expires in December, so it means you can buy it and hold it until December. It won't cost you anything like your charges and stuff like that you would usually get on trades. You buy it, you hold it, and you leave it, and then when it comes to December, you have a choice to roll it over onto another contract or take the profit as it is. But so far, this is looking good. We could get something like this play out where we see this come down, but again, in my opinion, I think that this will continue higher. Orange juice is another one, which is a very odd one, is orange juice. And one of the reasons that I'm looking at this is because I know that recently there's been some mixed weather in Brazil. I mean, generally speaking, it's hot, but if you had bad weather in Brazil, which is where most of your oranges are produced for your European sale anyways, Florida and Brazil is where it's mainly done. I think it's about 80% of your oranges come from that area. So if you have bad weather, in those sort of areas, then it affects the price of orange juice, which is a bizarre thing to sort of understand. But looking at the price, we are consolidating in this area, and I think it's only a matter of time before we break out. I would only be aiming for around 145, and I think that we'll get there sort of this month, maybe in the next 2 to 3 weeks, we'll get to around 145. So if you was buying in on this one, you'd want to be buying in somewhere around where we are now, with a stop loss quite flexible, maybe somewhere in the region of around 125, because as you can see, this fluctuates quite a lot, and there's nothing to say it could go down before it goes up like that. But generally speaking, I see a potential trade there to go along towards 145. Pretty good. Now, looking at some shares, New York Times, which is a newspaper based in New York, and I'm only looking at the technical side of things. I haven't looked at the financials, I'm just looking at the chart, but I see quite a good trend happening here. We're currently 48, 44, and I would see potentially a pullback towards the moving averages, which would be about 46, which would be a nice buy-in at 46, and then towards that 55 level. The thing is with this stock, it is quite a slow moving stock, I think, by the looks of it. It's not a rapid, apart from here, you don't move loads. So I think the chances are it could take the rest of the year before we potentially get up to somewhere like 55. So if you was buying this at 46, you probably want a stop loss at around 41. So your risk to reward's quite worth it. It's a 15% or so drop for a sort of 20% gain as such, or maybe 25% if you're aiming a bit higher than that. So generally, well, it's actually more, isn't it? It's 30%, so it's 35%, apologies to work that out then. It's 35% gain for a 15% loss. It's probably worth it. 2-to-1 risk would probably suggest that that's worth it. Now, there's two other shares that I have posted about as well, Nucor and Dexcom. I am watching these ones because I think that these are some of my favourites in terms of the stability of what they do and reasoning behind that. So Dexcom, they do heart monitoring systems and stuff like that. They had really good earnings. I've been looking at the earnings as well. The numbers are absolutely brilliant on them. And looking at the chart as well, we're down a little. We're only just up a little bit today, and we was up a little bit more. I think we was up at 0.3 at one point. I was looking at the financials, and even though I haven't posted about them, they are really good. They're on track to do the best numbers that they've ever done. They get government subsidiaries. I have posted about this before, but back when it was about 380, we're now at 505. So we've seen this really good rally and this increase. We've got this great rally from the brilliant numbers. We've had that pullback. We've tested the middle Bollinger Band, which is what we're doing at the moment. I'll just put that up. Hang on. So yeah, we've tested that Bollinger Band or thereabouts a couple of days back, and we're now starting to bounce. So we could definitely get a fall back to here and then continuation higher. But 550 is my target for the next 3 months, which is a nice 9 to 10% gain, depending on where you're buying in and if it's give or take. So 550 is where I'd be aiming. It does have a high PE ratio and it is worth quite a lot, and that is something to consider. But given that, there is another company which has a better valuation in terms of when we're comparing it to PE ratios, and that is Nucor. Nucor is, I think it's got a PE ratio of just 11, which for the general market, that's really cheap. Now, on the weekly time frame, this is probably one of my favourite stocks at this current moment in time. I've been looking at, I do actually have a position in this myself. I'm down at the moment because I only just got in today. But if it does fall or continues to fall, I will buy into this and start to build a position up in Nucor, because it is a steel manufacturer, and the infrastructure bill that's just been passed is a $2 trillion bill, which is more money in the economy, which is gonna boost spending, and this is the perfect company which is going to see the benefits of that. And one of the other things as well is I saw on this news as well, this is only just a couple of hours ago as well, Credit Suisse have put a price tag in of 142 sort of for the next 12 months, which is a nice increase as well of 20%. But what you find is when you get these people or these organizations that give these forecasts and the price targets, generally speaking, they tend to outperform, and there is no reason for Nucor not to do that, because they're huge. They're a $30-40 billion valuation company. They're on track to do record numbers again. So I was looking at this on Minipip as well. They do record numbers. So the financials, you've got $35 billion market cap. They're on track to do 31.6 billion with a record profit of 5.1 billion. That'll be the most that they've ever made ever. Total assets are 22.9 billion. Liabilities are 10.2 billion. You've got positive assets of 12.7 billion and a positive liabilities to assets ratio of 44.4%, which is below market average. Generally speaking, this is an undervalued company in terms of if we're comparing it to some sort of other companies, and given that I think that there's a cyclical trend at the moment, the Nasdaq is struggling, the Dow Jones, again is sort of reaching those all-time highs, but I've noticed the Nasdaq is really struggling at this 15,000 level. I still think it will go higher. I would not be a seller on this, but I'd wait for a better opportunity to get in, maybe around 14,500 before I consider going long again on the Nasdaq. I still think that we'll get to around 15,500 to 16,000 at some point this year. But generally speaking, I think that infrastructure is actually potentially going to do really well because of that infrastructure bill, and Nucor is going to be one of them companies that's going to benefit from it. So generally, looking at it over the next couple of weeks, I'd be targeting sort of this 130 region up here, and if we continue to fall, I'll be buying into this as we do have this trend line here, and we've got the moving Bollinger Band that's coming up. So I'm in about here, I'll be buying about here, and I'll just continue to buy it, which will just average down my buying price, which isn't a problem. It's a mega profitable company, and I just don't see any reason for it to go down at the moment unless the infrastructure bill randomly disappears, which won't happen. I will be tracking these stocks as well online on Instagram and on the website. If you are liking what you see and you are following us, I appreciate the likes and the subscribers. And thanks for watching.